I it makes sense to stream my audio, right? I'm gonna do that. Yeah, you got to. Yeah. Okay, starting from now, and I'll do that moving forward. Yeah, it doesn't make sense, right? Mm. All right, so I'm back long in the Nasdaq. Got me back in. Got me back in long. This is where I could pull back for a short entry. Okay. That candle close 5 minutes. Kind of a big red body bar with small wicks. It's kind of inconclusive. But before that, you had a long wick green bar there. This right here, that's a fingerprint for it. If it could break this structure, so you see this yellow line? Remember that yellow line I drew it at the open? It's coming to that. It's going to challenge that. Let's see if it bounces off of that, if it breaks through that. And VWAP is right below it. So it could be a fake out. You have to be careful with that. It could cross that yellow line, bounce off of VWAP, and go back up. This is why I'm more into these automated things because I don't have to think about it. Just program the safe rules and conditions and let it do it. The best setups, I think, to trade manually are like the golden setups. The ones that you can see from a mile away. That's what I like. Because you know that everybody else sees it too. And that's what you want. You want that trader, you know, that herd psychology where everybody sees it, everybody piles in, and we just revenue it. And we're there. It's just time dimensions, right? We're consolidating on the 4 hour chart. Okay, but it looks like we're bouncing off support on the 5 minute chart. So you have to take that into consideration. You know, on the 4 hour chart, it looks like we're consolidating, we're going to sell off. But how long does that take to build and form and then push through? You know, so that's where it's like you have to understand the dimensions. It's time, it's price location, you know, it's the trend, it's the structure, putting it all together, right? And it's not easy, bro. It's the hardest way to make easy money. But I think you're off to a great start. You're 19 now? 19, trading futures, understanding the markets, starting to understand the markets the way you do. It's a good start. Very good start. You're way ahead of the game. But you have to stay safe, you know? And you have good discipline. I know you do. Fucking 4 a.m. wake up. Jesus Christ. So, and you're not running game on any girls in the gym, like, on the side? No? You don't even think about it. You are a tremendous disciplined guy, bro. Tremendous. Being 19 and being like that, you are a fucking you are a robot. You're a rock. Yeah. All right. So I'm gonna continue building up this workspace here. That's what I'm saying. Be careful. Understand that, yeah, it might look like it's consolidating on the 4, but on the 5 minute, people are scalping that shit. They're scalping the long, you know? So you have to understand that, okay, there's different dimensions here. You have traders that are looking at the 5 minute, scalping it long on every little sell-off, they're scalping it long. And then you have the big institutions, you know, that they're selling to the scalpers. You get what I'm trying to say? Like the big institutions that, where the market doesn't move unless the big banks move it. The scalpers on Top Step, they don't move the market, you know? We don't move the market. We ride the market. It's the big banks, the big, financial hedge funds and all these big companies that have a lot of money and throw a lot of weight around. They're the ones that move the market. So what's happening here? This is a distribution phase here. And what are they doing? They're selling whenever price rallies to the top of the range, right? If you look at the 4 hour, whenever price goes to the top of the range, they're selling, they're getting rid of their position. And who are they selling to? To the scalpers that want to take a quick little swing. So you have to wait for all that uh, buying, those scalpers that are buying these little dips to get exhausted. Okay, and then price is going to break down because at the end of the day, the institutions want to make money, and they want to get rid of their position. They want to unload, right? Because look, let's just face it, in the higher time frame, this market is going sideways. It's not really going up anymore. The trend is really, not defined. It's not really down, it's not really up, kind of going sideways. So, you know, it's in balance. Very, very difficult to trade like that. So you have to be very disciplined right now. You can't expect it to just, oh, it's going to sell off right now and it's going to go all the way back down to, whatever number. Like, no, no, there's games, there's wheels within the wheels. Games being played here. hmm But look, if you look at the 15 minute, you see that long wick candle there? That's a pivot candle. That's where it pivots and then it sells off. So just wait, wait for the weakness. You know, you have to have an entry above price, a limit order. You cannot expect that you're going to get a perfect timing if you're looking at it in real time. You're just not. You're gonna miss it. You're gonna go to the bathroom. You're gonna get frustrated. You're gonna take a trade too soon, too late, whatever. You know, you have to play with limit orders. Okay, copper, still running. I'm gonna go long on Bitcoin again. It's interesting. I'm in a long on gold on one strategy, and I'm in a short on gold on the other. You know, so that's kind of an advantage, because I have good stop management here. So if I'm running these strategies on two different accounts, you know what I mean? Hmm. Gold, yeah, it's got a little trend there. But if you look at the 15, you got a long wick, uh, bullish bar there. Looks like this could be breaking out and breaking that little downtrend that it was in, you know. So this is why I say a human being, it's very hard to be like an automated strategy because the automated strategy doesn't get confused. It knows what it's looking for and it just does it, and it doesn't give a shit. There it goes. Okay, it broke that support, that little trend line. It's gonna hit VWAP here. Okay. Are you still in that short? All right, we have to look back and we have to dissect that. This is the journaling part. Okay, are you journaling yet? Okay, Mr. Robot, we have to. Hey, no, we have to do it. Okay, so this is the part where you don't like to write. I know you don't like to write. I've seen your handwriting. You don't like to write. Okay, I've seen it. So, but you have to do it. You want to trade, you have to do it. You have to document these moves. You have to take screenshots, put it in a Google slide or a Google document. Uh, draw lines. Draw. Um, what would have been the perfect entry? Where were things lined up? How was it? Where was the fake out? Draw type out all your ideas. Write it down in a journal. That's the real work is in the journal. My Nasdaq long is closed. Mhm. J&J, that's a good one. Everything's selling off. It's about to hit a little support area off of the 830 move breakout, the CPI move breakout. So you could expect it to pop up, okay? Maybe give you a good entry short. I would scale into it one at a time, okay? You want to give it one last shot. It's about to be 1030. So give you a little pop. You scale in one at a time. Gold. All right, here's that little pop up. You're watching it, right? Okay. I, I would get down into the 1 minute and look for a little structure. to place your first short. Okay, now my strategy got me long on oil. So I had a short, and now the strategy got me long. I like that. I'm short in the NASDAQ. The strategy just did it. Didn't even think. All right. So gold is hitting some resistance here. Let's see this stuff out. You're still good on a NASDAQ short. It's still consolidating on the 4 hour chart. Okay. It's not like it's running away from you. Always keep that in mind. Always reference the high time frame. Come on, gold. I'm gonna have to close you if you don't fucking turn it around. And if you look at the 60-minute Bollinger Band, okay, take a look at it. Are you have the Bollinger Band loaded on your chart? You do. Okay. So whenever price is like you see it consolidating in the higher time frame. Take a look at the 60-minute Bollinger and it'll give you good support and resistance. Like look at this. You see that? Across the Bollinger, right into this little area with these small candles. Boom, sold off. You know, this is just going sideways, you know, range bound. All right, so the short was right there. Boom. Range bound market on the higher time frame. When I say higher time frame, I'm talking about, you know, the daily and the 240. Go to the 60-minute and trade that's a golden setup right there. Boom, right there. And I think the buyers are going to step in here. I think everybody has a bullish bias here. And the bonds are dropping. People are euphoric. Team America, fuck yeah. Oh, those those my Nasdaq short. Yeah, I'm gonna have to do something about this org code. It is not ready for prime time. This reversal code is doing pretty good. It's crazy, bro. Because just on a whim, this past weekend, I was like, man, let me just write this little reversal code and see what happens. Let me incorporate the time stuff that I've been working with so much. You know, the whole 9:30, 8:30, all that bullshit. And it's working pretty damn well. Um, so even though the orb hasn't panned out exactly how I expected it, sometimes it's a marvelous day. It's like amazing. And then other days it's kind of like a disaster. The reversal code is way more adaptive. It just reacts to the market swing way faster. So I'm going to incorporate code that from the reversal into the orb in specific scenarios. And I think it's going to help out a lot. Come on, gold. Gold is there. I mean, oil long, which looks like a bad idea right now. Feels that bad. It actually should stop me now in the next candle if it goes below 100 bucks. If it stays below 100 bucks, I should say. I'll let it. I'll leave it. I'm gonna leave it. Make it a little cover back. Get that. All right. So did you get in short on the Nasdaq? Okay. What was your price? Did you take the VWAP? Okay. Okay. Have a tight stop right there at the candle of 10:35. It's going to challenge that. It's a choppy day. These are the hardest times. So you have to rely on that 60-minute bowling. Okay. So let's incorporate that into the trading plan. Do you have a trading plan yet? Because my trading plan, I've been basically incorporating it into the code is what I've been doing. But if you're going to trade manually, you got to document your trading plan. You need a trading plan. You need examples with screenshots. This is a really good day as a lesson. You got higher time frame consolidation, okay? Very choppy, not easy to trade, okay? So what do you do on choppy days? This is a very good example of what do you do on a choppy day? Well, rely on the 60-minute Bollinger would be a good thing to do. You know what I mean? So that would be if range bound or consolidating on the 240-minute chart, use the 60-minute Bollinger Band as support or resistance. You know, look for a golden setup, you know, in that context. You have to document this stuff. And then you have to journal so that you basically document that you follow your plan. What did you do good? What didn't you do good? You with me? And let's work on it together. So I want you to take the initiative to create a Google document, add me as a editor or whatever. But this is your document. I want you to start it off, okay? And I want you to start doing this. I want you to start documenting exactly what you're looking for. What time you wake up? What time do you need to use the bathroom? If that's part of your routine, you have to think about that. So you stay on schedule and you stay ready for your trades. Okay? Are you working today? What time? Okay. So you have time to start. Are you going to work out or do anything after you trade? I already did that, right? You're going to just chill? Okay, I want you to do this. I want you to start. It's not, and a trading plan never has an end, okay? Because there's always something new to add to your trading plan. It's just a running, what they call a living, breathing document that never ends. You always add to it. So you don't have to think about it like, oh my God, I have to finish. It's not a book report, all right? There's no deadline, okay? You have to start this. All right? NASDAQ coming back up into an area there. 500. That's the origin of the breakdown. If you're looking at my screen, I'm back short on the NASDAQ. So if you're looking at my screen, there's like a little micro zone there, which is the origin of this breakdown. And it's coming back in there. Okay. You can watch it on the 1 minute, on the tick. Okay. You could draw that level on your chart. Okay. You also include this whole structure here. Right? I also like to do this, overlapping the zones. And I like to look at the middle so that you could scale in two places. You know, one right here. And then there. Okay. So you see what I'm drawing here? Do you understand what I'm doing here? So, you got this little zone right here. One of my favorite setups. Right there. You got that little guy, and then you got this whole thing right there. So now you got, put this, put the line right here. That's where you could set up a limit order right there. You could set up a limit order right there, and then another one right there, and then you could do another one. If your max is three uh, contracts, you do another one on this candle, and one right there, right here. You see what I'm doing there? And that's my plan. Let me right justify this. So you had, obviously looking back is always easy, right? Uh, Seeing it in real time takes a lot of discipline and a plan. You gotta have a plan. So you could have taken an anticipatorial type of trade using that Bollinger on the 60, but now that it's sold off, now we're looking for the pullback. It sold off and it broke a structure. So now we're looking at this pullback and we're saying to ourselves, okay, what do we got here? And if you really want to get, specific about this, the Bollinger Band entry that could have been your first entry, right? Right? If we would have looked at this structure right here, the cut lines up perfectly. Just put it down to right there. It crossed the middle right here. You see what I'm doing there? I don't know if you see this. You see this line right here in the middle? Look how it crossed it and then sold off. So range bound markets, consolidation on the higher time frame, look at the 60-minute with support and resistance, identify a zone for a golden entry, okay? Identify a structure, boom, you're getting on a pullback, it hasn't run away from you yet, you're still consolidating on the higher time frame. Be patient. What do we got here? I'm talking to you and these trades are getting away from me. Oil is just slicing me up, slicing me up. I gotta take these profits quick now. Oil and gold. I was up 600 bucks. Now I'm down to only 282. This crypto, gold and this crypto. Gold looks like yeah. People want to go long gold. There, I can see it. And that's the thing about this code is that it catches runners. It can get chopped up if the market is choppy. This new reversal code that I have is way better at conserving, um, at cutting losses fast than the org. So, um, but the same premise, it has the same powerful premise behind it in that it can catch runners. And, on a day where the market trends like crazy, it's like, dude, it could be a real rip. Um, if you look at if you look at the hourly candle on all the markets, they're all small body candles. Like the markets have not really moved today. Like look at this candle right here. The dailies are all the way to the left, right? So look at the daily over here on the S&P. Nothing. It's like a fucking doji. Look at the daily on the Nasdaq. Small body candle. The daily on the Dow. Small body. Small body on the crypto. Small body on oil. Small body. The only one that has a bigger body is gold right now. Small body. Oh no, I'm sorry. That's not gold. That's not. The day I decided to not trade nat gas, it has a bigger body candle. Gold. Small body candle. Copper, small body candle. So the markets have been really, really, tight range today. And I'm up 340, which is, that's a good thing on a choppy day. I'll take it. Hypothetically, I wonder what uh, net gas would have done. Yeah, it's not much. I am not 310. What's the date today? Yeah, 311. I am just not into this net gas anymore. So you gotta make up your mind, boy. Make up your mind. So on today, so the orb, the original orb on a day like today, it's down big. It's down $1,400. Okay. On this reversal code, it's up 340. And at one point it was up $1,000 with the open P&L. It had a closed P&L up 600. Right now it's up 340. So it's a lot better on these choppy days. Um, So I'm going to merge some of this code from the reversal into the org, and that'll allow me to have a better break-even stop. So are you trading still, or are you kind of done for the day? Are you trying to take this setup on Nasdaq? It's back up in there. Oh shit! Wait a minute. Where are we? It's approaching. It still has a way to go. I'm back long on that asset. Not sure if I like that. Tough city, bro. What do you have to do before you go to work? Shower. Shower. Okay. So you just need like about an hour to get ready, right? 30 minutes to get ready, 30 minutes to get there. Oh, so you need to get out with an hour. No, wait, I'm talking about like how long does it take? Hmm? Get to work. Yeah. Even 3 o'clock with the school zones and all that, 20 minutes. Okay. And how long does it take to get ready for work? Yeah. Okay. So you need to be done with everything by at least 1:30. So you can get ready for work and get there. Exactly. Okay. So it's coming up at 11 o'clock. All right. We could have reversal time here. But so let's give it one more hour of trading here. Okay. And then what I want to do is diagram something for you real quick. I'm gonna take one. Something with the code, the logic of the code of how it works, and what I'm planning on doing, like how the reversal one works and how the orb works, and how I'm going to merge some of the code together. Just talking shop. I also want you to start thinking about your trade plan. We need to formulate. Okay, you handle that. But I want you to start thinking about that. Start writing some ideas down. It doesn't have to be perfect because this is rough draft. Okay, this could take months to finish your trade plan. You know, I'm not saying that it will, but don't be discouraged if you can't, put it all to get it all together the way you like it, right away. It takes time. But good things take time, right? So the point is quality. We want to have a quality trade plan. We want to review it. All right, we got a NASDAQ coming into what I had proposed as the first entry. It's getting there. I would be patient. I'm in a NASDAQ long right now, so I might just take the profit. Wow, gold selling off hard. It's gonna wipe out my profit. Gold, don't fucking up. What a choppy day, bro. Look at gold. It's just a fucking doji candle on the daily chart. Jesus. Everything's like a shitty candle. The S&P is a doji. Like these are the days that are the toughest. Yeah, I guess that's on gold. Okay. I'm only up 194 now. You done trading? Okay. Can I diagram something for you real quick? Uh, my view of, so the orb, oh, let me share my screen. Now you see the one, right? You see my screen, right? MS Paint. All right. That's that. All right. So the orb works like this. Okay. So at 9:30, you see my screen, right? White, I'm drawing. So let's say, you had some candles in the pre-market, blah, blah, blah. It's all chopping around, it's going down. And then at 9:30, the market opens, right? Um, it calculates the top and the bottom of whatever candle I program it on. And in this case, it would be the 9:30 candle. So it would be basically the close of 9:25. The way it works is 9:25 to 9:30. Okay, it's forming this candle, right? The open and the close. Now, the code at 9:35, okay, if price and there's a middle line, right? The middle of that rate of that candle. If at 9:35, okay, it's above the middle, it goes long. If at 9:35 it's below, it goes short. Okay? So now that means that it could technically get in long here, or it could get in short right here, down here. All right. So by 9:40, it could be going down, or it could be going like this and then cross back up and heading up. And that would be a stop out. When it crosses the middle line, that's a stop out. Okay. And it goes and it reverses and it goes back long. All right. On that stop out. But that also means that it could cross that between that time and 9:40, it could cross and it could be up here. It could be right up here and then it could take a long and take a huge stop out. and that's the problem. And I played around with reducing um, the interval, to be 1 minute, to be the tick, all that, to get more reactive kind of code, right? To take more trades and get a better feel. But in doing that, I've taken way more stops. So you get a better feel, but you get um, more stop outs. So reducing, you know, what's the interval. So going from, 5 to 1 minute for the tick, okay, means the feel is better. Let's say better feel, more stops. Not good. Okay. All right. Keeping it at the 5 is not a good feel, but less stops. All right. So one thing that I did to improve this, okay, was I said, okay, let me take the size of this range, okay, of this candle range, and let me multiply it by 2. Okay, so if the size of this range, let's say, is the value of 10, and I'm going to say boom, boom, okay, so 20. This is just made up numbers here. 20 points, let's say. If it crosses above the range, and is less than the 20 points that got calculated here, then you could take the long, okay? Or if it crosses below the range and it stays within this little buffer, this is a buffer, buffer below, buffer above. I know there's another F there, but okay, then you could take the trade. That's a good trade. You could take the long, or you could take the short. If it crosses above the buffer, then the fill is no good. It's traveled too far, right? Do not no trade. Okay, you with me so far? All right. So I did that, and that helps me not take like terrible fills. But it doesn't do anything about the stop outs. I could take, let's say I got the trade right here, okay? But then it comes back here and then it gets stopped out over here, right? And that's a lot of, that's still a big stop out. So I found this TradeStation built-in strategy that you could add on to your other strategies, because you could add multiple strategies working together. So you could have a strategy that gets you in, and then a strategy that stops you out, or a break-even strategy that you can layer in. Okay, what's going on with this code? We're long the Nasdaq. It's selling off. It literally hit the line that I drew. It's selling off a little bit. Uh, we're long copper. No, yeah. Oh, we're flat on copper. I guess I disabled it. Yeah. Short on gold. Well, we're doing this right now. It's okay. All right. So back to this. So the orb always had this weakness, right? So now there's a strategy called break even strategy, which means that, let's say you could program, if it goes up, if my position goes up $50, okay, add a break even stop. So what that means, let's say it goes up, I got in like right here, okay, and I'm up $50. Great. Now my break even stop is right here, right? Break even. Okay. And if it pulls back, it'll get me out right at the break even. It doesn't work on the interval, it works in real time, so it's nice. Okay. But the problem with that is a lot of times, okay, a lot of times it'll do something like this. It'll break even, stop, I'm out of the trade, and then it never even crosses this line again, and then it goes back like that. You get what I'm saying? So so then I started playing around with this reversal code, which is pretty straightforward. All it is oops, if price is oh shit. No, that's the pen. Where's the brush? Fuck you, mother brush. What the fuck is this? Uh, uh, if price is going down, right, in this example, and then it goes back up, you got some moving averages here, layered, right? Very simple. And if it crosses above, you get it long, right? If it goes down and it crosses the moving average, you go short. And I played around with that a lot, and it didn't work. But then I started including the time. I started saying, okay, if it's past 9:30, similar to the orb, then I could take these trades, right? That kind of thing. So now what I'm gonna do is incorporate. Get a fucking thing. I got away from me. It's my eye off it. Ooh, look at that short on the Nasdaq, bro. He's right there. He's right there. Not easy. Not an easy day. Not an easy day. Okay. So now what I'm gonna do with the orb, it's the same premise. It crosses above, you get long, enable a tight break even. Let's say, $50. Okay. So if it reaches $50, boom, you're out. But now if it does one of these and it goes back up like that, I'm gonna include the moving averages. So it'll get me back long. If it's above the orb line, it'll be long. If it's below, let's say I got short here, okay, then I got break even here, stop out, okay, and then here's my moving average, and then price is below the orb. It never crosses it again, but then below it goes down again, boom, and it'll get back short because it'll include the reversal code in there. So basically, I am combining the orb, okay, plus the reversal logic, plus the break even uh, logic. And if this works, right, then I could experiment with adding another kind of stop loss code altogether, you know, everything together. So that's what I'm doing. That's what I've been playing around with. I've been experimenting a lot of chart time, a lot of chart time with, you got time right here, right? I've been playing with the London session, 5 a.m. Okay, the 8:30, okay, which is news and metals. This is really anything, but mostly energies is what I've seen. Energies and metals. This is news and metals and really anything. If there's news, anything can happen. News is special. 9 a.m. Okay, this is energy, oil, oil and nat gas, but you already know how I feel about nat gas at this point. And then you got 9:30, which is the indexes, right? Stocks, and really anything. You know, it could be gold, gold or energy. Really depends on the setup, but mostly it's indexes. And then you got your reversal time. You got your 10, 10:30, and then 11. All right. So these are more like, intraday reversal times. So I've been playing around a lot with these time frames, right? Playing around a lot with the orb, playing around a lot with uh, the reversal, a lot of chart time. And I feel like I've gotten closer and closer and closer and closer to a consistent winning kind of strategy. So it's getting there. I know that if the market takes off and it's very directional for the day, these strategies are winners. Okay, you'll have a big winning day. If the markets are choppy like today, then you have a loser right now on the orb. Right now on the orb, I'm up 600, but I'm down 1700 close P&L on the orb. Okay, so the orb takes bigger stops, and that's what I'm going to try to reduce. The reversal is way better at managing or taking smaller stop losses and being more directional, like it takes the direction faster. So I'm going to work on a code that is a hybrid of both. Okay. So you can see on my screen, it's a it's a very choppy day, and you can see my closed P&L is 250 negative and up to 280 right now. So I'm basically flat for the day. Okay. If I was watching it more closely, okay, and I would have just taken, at one point you saw on my screen, I was up $1,000. So, even on a choppy day, it had potential of, being a really good day. It's just, I'm not really, I just didn't close it. You know what I mean? It could have been a situation. Oh, it's choppy. I'm up 1,000. Close it. Disable all the strategies. I'm done for the day. And that's something that I have to journal. Okay. So that becomes something that I journal and I write to myself. Okay, if on the higher time frame the structure looks choppy and I'm up X amount of dollars, I'm done for the day. You only make those conclusions, those observations by journaling. Okay. You think that like, no, I'll do it next time. No, you won't. No, you won't. You have to journal. You have to conceptualize it. You have to think about it. You have to visualize it in your mind, and then it becomes concrete. You know. Um, there you go. Here's the short, bro. By the way, you got the short. It's dropping. Trading manually is very, very difficult because it requires a lot of discipline. Okay. So choppy, higher time frame, use the 60-minute. Here, let's do this, right? I wanna make this, I wanna build this into a workflow, okay? Daily to 40 minute. And we are short, I suppose, on the Nasdaq now. Okay. If choppy or consolidating on the higher time frame, okay, use 60-minute. This is what I mean by trading plan. This has to be part of your trading plan. You have to build workflows. All right. It's almost like the code, but you're doing it manually. Use 60-minute Bollinger Golden Setup. Okay. So that's one scenario, right? What if it's a strong trending day, or something else? So this is what you have to do. It's like if else, right? You have to build this into your trading plan. So what kind of entry? What's the entry going to be like, right? So it's step one, step two, step three. You know what I mean? So you got that scenario. What if, it's a strong trend, right? What if it's trending strongly? What if it's a pullback on the higher time frame into a strong trending market? Okay. What's step one? What's step two? What's step three? What's step one over here? What's step two? What's step three? You know? So let me show you one of my favorite kind of setups, right? So, okay. One of my favorite setups is this. So you have a trend here, you draw a line, okay? Usually there's an up thrust, and you saw that today. Up thrust, break down, pull back into the origin of that breakdown, and then a continuation. You saw that today. I drew it on the chart, okay? And what you could do is you have entry number one, okay? Entry number two, entry number three. You get what I'm saying? You could scale in. The same thing on a long. It's trending down, okay? Usually there's an up thrust or a spring. This is the spring. It has a dip. This is the up thrust before it dips, right? This is the last, what you call a liquidity sweep, right? Where it's finding liquidity, right? Usually this, usually this origin, okay, of the break will have a little consolidation, like little micro consolidation right before. And usually it'll be breaking a support or resistance area. Like you'll see like, okay, there was like a little support area here, right? Do a green line here. This was support and it broke support. It broke support right here. So now that support becomes resistance. So it was green here. Now this line is red because now it becomes resistance, right? And then you come into your zone and then you could scale in once, you could scale in twice. And this is stuff that you have to document into your trading plan. This is a setup, right? This is a setup. In this case, going long, this was resistance, but once it breaks above, now it becomes support. Once it breaks above, now it's support. Okay? And then now you're looking for the pullback. Boom. You could take a trade here. You add one here. You know, maybe there's another area right here. You add another one here. You add another one there. And then, you know, your stop out is done here. You get what I mean? And it's the same setup over and over again. It's the same setup over and over again. Okay? It's just how you take it. What's the context of the setup? You know, if the higher time frame looks like this is the higher time frame, like it's like it did today. You know, on the 240, it looks like this. On the daily, it looks like this. And then you got a candle that looks like this, like doji candles. You know, a couple dojis. But on the 240, you have, you know, more candles and it looks like that, right? Well, you got to look inside of this mess. You know, you look for that 60-minute Bollinger entry. You know, could be, you know, one setup where, okay, you take that fucking, you know, boom, here's an entry right there, you know, okay, now here's the line, right? And now it breaks down. Okay. Now it pulls back. Okay, there's my entry right there. Now the downtrend forms. You see what I mean? This is why I have my charts set up this way, where um this is why I have this, the dashboard. Okay, where I have the daily, the 240, the 60, the 30, all that. This is why I have it that way. It's for this kind of thing. Okay, it's a chronological thing. Time is very important. Okay, time and structure is very important. You get what I mean? Cool. All right. Did you get anything out of that? I mean, this is this is this is the meat and potatoes. You know, the basics of what I do. Okay. I look at structure on the higher time frame, and then I look for setups on the lower time frame. Depending on the structure on the higher time frame, the way I look for the setup on the lower time frame can vary. Okay, so you always start with the higher time frame, which you do because you started out the day like, oh, I think it's going to sell off on the Nasdaq. Yeah, you're right. It had a little sell-off today. I mean, if you look at it, we're down 0.5%. Not much. I mean, it's a choppy day, but give it time, it could be selling off into the afternoon, you know? So yeah, you were right, but where is the setup? Where is your entry? Your entry is the setup part, okay? Looking at the structure forms your bias, gives you context of the market, okay? But now you have to dig deeper and look for a good setup where it makes sense to get in because, right, we want to buy low, sell high, right? And we don't want to chase price. We want price to come to the level that we want So how do you set yourself up for success is, by having a workflow, okay, that keeps you safe and taking good quality setup trades. So I want to see your workflow is what I'm saying. Okay? Cool? All right, bro. All right, that's all. All right, man, I'll leave you with that. It's 11:30. I know you're gonna eat, you're gonna get ready. I love you. Be patient, be positive, okay? And don't get frustrated about this shit. This shit is you're only 19, okay? You're only 19 and you're getting into this game early and you're already understanding that this is not easy, okay? This is not easy, all right? So anybody who's like, "Oh, I'm gonna be a day trader," da 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 da, I laugh in their face. You know who was telling me that the other day in Christmas? You weren't there. You know that cousin of mine, Nelson, that's a DJ? You've probably never. Uh, he's a cousin of. He's like a second cousin on my mom's side. He goes to like Popo's house and Fifi's house sometimes. He was really overweight. Now he got on Ozempic. He's lost like 100 pounds. Looks good. I'm glad for him. But he was telling me during Christmas, like, oh yeah, looking at trading, and I was like, oh, okay. And I was like, what do you know about trading? And he doesn't know anything. Doesn't know shit. You know, you have to earn your stripes in this game, bro. Okay, you have to earn your stripes. This is college right here. You're taking college courses every morning. Okay, so this shit is not easy. Anybody who tells you that it's, I'm gonna be a day trader and figure it out is full of shit. Right? Yeah. So yeah, man. So look, this thing took a short on the Nasdaq, and I'm here fucking talking to you. It's up $500. I'm down 240 for the day, but I'm up 500 open. And I got to figure out how to manage these trades better. I don't have it all figured out. Like I have to rely more on, my support and resistance, my technical analysis for my exits. But look, I'm in a short on the Nasdaq. Let's see if it breaks the support area here. And it gives me a big, big winner for the day. I really like what's happening here. To give you context on the orb, I'm up $600 still. I'm down 1900 a close. That's not good. So that's what I've been struggling with, and but I'll get there. I've made progress, and I'm gonna make these adjustments, and I think I'm confident it's gonna get better. And then if we have it fully automated, now we just have to manage the machine. It's like I think about it like, in the factory, in Sixto packaging, right? The machine does the printing, right? But you gotta operate the machine, make sure it's running right. So these codes, these bots, these algorithms are the machine, but I have to manage the machine. So part of this is building the best machine possible, but also training myself to manage the machine the best way possible. So that's how I look. That's how I look at it. All right, brother. I love you, man. Have a good day. All right.